Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is September 2nd of 2021. We're going to discuss some topics of the day and some things that we're thinking about on a go-forward basis, so you should be too. So thanks for watching. Today I'm going to discuss a lot of what's on the horizon, the concerns that we have on a short-term and long-term basis, what could impact the financial markets on a go-forward basis. Ultimately, what's our greatest threat? Now, here on the board behind me, we throw up some ideas that we receive, or concerns, if you will, that we're reading in our financial journals or that we have from our clients on our client reviews. Now, clients are super happy. I mean, the reviews have been wonderful, and it's great to have markets that are hitting all-time highs because statements look great. Let's be quite frank about that. But on a go-forward basis, we all know that markets don't go straight up. So we also are prepared strategically with cash in our client portfolios because we know we can take advantage of the opportunities. If you watched my video on Tuesday, I discussed about what Larry Kudlow said, that we're still living in a Trump economy, and there's a lot of truth to that as it relates to what Congress has yet to do, which is repeal any of the tax structure or the favorable business environment on the most part for the economy to continue to do its thing. And we're seeing that as evidenced by companies able to execute, corporations able to report earnings, even on a gross and a net basis at all-time high. I reported that on my last Tuesday video. If you haven't checked it out, I encourage you to do so because there's a lot of rich content there. It also explains why the markets are up. But at the same time, we're also thinking about, on a go-forward basis, we know that Congress is in session. They're going to restructure sort of the foundations of the Trump economy on a go-forward basis. So that is a threat. So we have that here, which is Washington, right? Geopolitical or even Congress and what they're trying to sort of structure sort of on a fiscal policy level. But then we also have monetary policy in the Federal Reserve. I didn't put them up here, but they're definitely part of sort of the Washington world, if you will, what keeps us up at night. Yields, so the 10-year treasury, we're keeping that, and that's in the Federal Reserve's realm, if you will, in terms of bond purchases, as well as where interest rates are. And so that could be a misstep or a threat on a go-forward basis. Job reports, again, we're in the Trump economy, so tomorrow, here's the deal. We don't know if it's the Delta variant that's going to have a net impact in terms of jobs number, or is it going to be the stoppage of unemployment assistance. And so people are now looking for jobs. Therefore, there's more people that are going out there and getting jobs. We do know that the Trump economy, if you will, or the foundation of the economy, if you will, is now put into place that I can't tell you a business owner that we either have as a client or we know personally that we're talking to in the community or reading in the Wall Street Journal that there's a job shortage out here and there's a demand, a huge demand for talent. It's something I've never seen in 25 plus years, and most people that I talk to that are a little bit older than me and a lot older than me has never seen this type of economy. So there's a job if you need it or if you want it, but then there's also that 10 million that are still looking for jobs. Again, the assistance stops shortly, so we'll see. That jobs number will be but so this is not going to be a threat to the economy. In fact, this is trending in the right direction, sort of on all levels, if you will. Corporate earnings, again, in my Tuesday report, I talked about corporate earnings just blowing away even the highest levels of 2019 when the economy is super healthy. So that's positive. Is it the Delta variant? I put Delta E, F, G, H, I, J, and I'm not being sarcastic or facetious about this. Literally, they're talking about more variants down the road. So will that be a threat? We don't know. I mean, time will tell. But the consumer confidence and consumer spending, if you will, that is a concern, right? So if confidence sort of pulls back, if consumer spending pulls back, or we run out of stimulus and people run out of savings, and therefore that's 2/3 of the U.S. economy or earnings is from consumer spending. So this is a concern right here. We're going to be talking about that and monitoring that on a go-forward basis because confidence can be shattered overnight, right? And we're seeing what's happening in the Middle East right now. So we're going to have those reports in a week or so in terms of consumer confidence. My guess is, I'm not an economist and I'm not doing those surveys, but consumer confidence will be pulling back. So let's just hope it's a momentary pullback and on a go-forward basis, we rebound, but we'll see. The good news is that we're coming into back to school season, so there's shoppers out there, as well as the holiday season, and we're all making up for holidays that we didn't get to participate in last year. So my bet is that consumer confidence will spike back up. And then we also have global supply chain constraints. Well, the bottom line is that while global growth has been, both here and globally, has been inhibited but it hasn't been derailed. There have been a lot of bottlenecks, the Delta variant, from also the staffing shortages and supply shortages. And so we're seeing that all across the spectrum. So Rob, really, what's the deal here? What would be the greatest concern? Well, I kind of put it in my headline if you read it, but I didn't put it up here yet. It's basically schools. And this is not me. This is not me, my personal opinion. This is in the financial journals today. Strategist did a report today that shows that the rise of the Delta variant, if you look at the Delta variant from last time and the rise, you're also looking at the online attendance, right, for students in schools. And it was the same pattern. It was a lagging pattern, right, because you have to have the cases rise before policy and administrators sort of make that call. And you have, once again, people staying at home and learning from home. Now, why is that a cause and effect? Because schools affect everything here. They affect the basically primarily job market, or even companies having their employees come back to the office or even work remotely. That slows everything down, especially if you're just a single family, a single parent. You have to be home, and you have to be home and then online schooling once again. Again, I hope and I pray as a father of 4, and many of us out there who have kids and grandkids and great-grandkids, that this doesn't sort of fall in line. I will encourage all of our schools to do the right thing and sort of figure out what's right for them based upon the geographic region. But that's also the beauty of it, right? So what we had last time is the diversification of all 50 states, diversification of our global sort of world. So as the virus isn't as predictable as we think, and it's not just located to one region, it also is sort of fits and starts in different regions. So let's say if California or Florida are having issues, some other state might be just humming along, right? So what does that mean? The take-home point is that the major slowdown here to everything, and the key here, if policymakers, if Delta gets out of hand or any coronavirus in the future is a bigger threat, and we have to bring our kids home, again, virtual learning, and as well as working from home, if you will, that will be slowing the economy once again. I think that's the biggest threat on a go-forward basis. Now we know, and we've learned, that corporations can make a lot of money on a go-forward basis, but I don't know that Congress or the U.S. government has the appetite to throw down another sort of stay-at-home stimulus to all the small businesses or all the schools or everyone that would need assistance if it was another shutdown. So we don't believe that that's going to happen here at Blanke Schein Wealth Management. We pray that that doesn't happen and that the virus sort of runs its way and sort of peaks and just goes away. Obviously, that's not going to happen immediately. And so we want everyone to do the right thing, stay healthy and safe, and follow all of those laws and rules and everything. But the reality is that this is what we're seeing right now. And the reason why I'm bringing that up is this is coming up in our financial publications, our research. So that's what Wall Street and we're paying attention to. Sort of the inside track, if you will, at Blanke Schein Wealth Management. Again, we're positioned. We'll take advantage of it just like we did last time for our clients. So we welcome the opportunity if we're given an opportunity of a market pullback because we're still foundationally on a strong economy on a go-forward basis. But essentially, there's also things on here that might not be on here that's a threat on a go-forward basis. But for everyone that's around the U.S., I know there's a lot of things from fires up north in California to all of our, I talked to several clients today on the East Coast that are, through the latest Ida hurricane or global, I think tropical storm now. But everyone seems to be doing just well in the Blanke Schein Wealth Management world. If you need us, we're here for you. But we want everyone to stay healthy and safe. And thanks for tuning in today. And we'll keep you tuned in as to what we're paying attention to, so you should be too. Thanks for watching.